If that's what happens, that we get all of the sudden monetary policy is being made in the White House, probably get a sugar high in the beginning. Get a burst of activity. Everybody thinks things are going great. Interest rates are low, lots of investment and growth and all of that. And then you also get the impact of inflation on their activities, right? And so you probably get that's when you get a stagflation situation, right? Where the economy starts to slow down, but inflation picks up. In countries that have done this, it's been bad, right? This has ushered in a long period of prolonged recessions with inflation, turmoil in the government. So it's not pretty.
Hi, Adam Gower here, founder of GowerCrowd.com and host of this podcast and YouTube series, Real Estate Market Watch, Current Events Through a Real Estate Lens. Now, the current events that we cover in today's podcast are at the very tip of the current event arrow. My guest is Erica Groshen, who was the 14th Commissioner of the US Bureau of Labor Statistics, the BLS, that has been thrust into the limelight in recent weeks with the firing of Erica McIntyre, the former, most recent commissioner of the agency by the president for statistics that were deemed inaccurate and misleading. So my conversation with Erica Groshen today actually dives into the reality of what those numbers are, how they're used, how they're gathered, how they stand the test of academic and statistical rigor. And we also talk about how they're used by the Fed, by businesses, and what the implication is of any kind of doubt being sown on those data, what that actually means for the country and what it means for businesses, and of course, what it means for real estate. Erica was also the Vice President of the Federal Bank of New York. And so as we wrap up our conversation today, she shares with me some thoughts about the pressure that has been put on the Federal Reserve and what the implications of that are on the country and on the economy and on business. And you'd be very interested to hear what she has to say about that. I'm glad to say it actually is exactly what I think, what I've been talking about. So it's extremely reassuring for me to hear somebody with the kind of credentials that Erica has thinking exactly the same way. Okay, so I will be summarizing this conversation in my newsletter. So if you'd like to read about it, please go to GowerCrowd.com, subscribe to the newsletter, and you'll get a nice written summary of it as well. And if we're not connected on LinkedIn, go ahead and connect with me there. Just look up GowerCrowd or my name should pop up somewhere and connect with me there. I am been talking a lot on LinkedIn recently and would love you to join the conversation there as well. Okay, let's move on. Erica Groshen, the 14th Commissioner of the US Bureau of Labor Statistics. Here she is. Erica, thank you so very much for joining me today. I'm really delighted to have you. You know, there's been a lot of kerfuffle around the BLS recently, and I actually I read a piece, an opinion, actually an article about one of your successors who recently left under somewhat controversial circumstances, who said the greatest, what really we should be doing should be invisible to everyone and no one should ever hear about us. And so, well, now suddenly everybody does know what of labor statistics are. So what I wanted to ask you, if I may, just to kick off with, for people unfamiliar, there are two main surveys, right, that the BLS produces, the current employment statistics and also the current population survey, as far as I understand. So
that question, when we're talking about the employment situation, then that's totally right. But the BLS has about 25 programs, and each one is informed by a different set of information, most of them by surveys, although some of them by administrative data, and some by a combination. So even the CES is it's a survey, but it runs off a backbone of administrative data.
Okay, so can you just explain that a little bit more? This
Yeah.
obviously is the most visible one currently, particularly after the Fed meeting yesterday that really lent into employment and unemployment data. So it's clearly incredibly important for the direction of the economy because it drives, at least in part, Fed decisions, doesn't it?
Yes. Oh, totally. I mean, the Fed has a dual mandate:
Hmm.
maximum sustainable employment and stable prices. And who measures those two things? The BLS. Right. So the CES, the payroll survey, I'm going to maybe tell me if this is a little bit more in the weeds than you want. I'm going to start, and you can cut me off when I start to get too weedy here.
Okay.
But the BLS can get very, very complete and very detailed employment data for 95% of jobs in the country, because it pays the states to curate information that it gets from the unemployment insurance system in each of the states. So in order to run that program, then all of the employers who have anybody who's eligible for unemployment insurance have to send in a quarterly report saying how many employees they have. And that's used for what's called the experience rating element, part of the funding of the unemployment insurance system. So BLS pays the states to take some of that information. Basically, it's just how many employees and what the wage bill was for each month and each quarter. And it puts them into a data set that the BLS calls the Quarterly Census of Employment and Wages. That's the QCEW. And so that combined with information that BLS collects on some people who have regular jobs but are not covered by unemployment insurance, which is some parts of the federal government and a few other parts. BLS puts that together on a regular basis every quarter. It puts these together. And that is great, really detailed. Everybody in there, more or less, about 95% of jobs in the country, they're all in there. But it takes a long time to do that. Companies don't have to report to their state until 3 months after the end of a quarter. And the states then have to put it all together, and then they give it to the BLS, which looks through it and does the quality control, all of that. And the BLS actually is interested in a little more information that's in that it is in the QCEW, because some UI some UI accounts cover more than one workplace, and they may be in different, it could even be in different states. So the BLS has to then divide up their reports, and there's quality control, and they link them over time, things like that. Okay, so BLS does that, but that's it now produces that much faster than it used to. Now it produces it 6 to 9 months after the end of the quarter. But that's still pretty late, right? People want to know much faster than that what employment is doing in the country.
Now sorry, go ahead.
Yeah. So to get it faster than what the BLS does is it says, okay, every time we've done one of these massive, creating this business register from the QCEW, we're going to sample some of those employers And we're going to ask them on a monthly basis what's going on with their jobs. And we're going to use that to say what we think has happened to the number of jobs overall on the basis of the sample that is the CES, or the payroll survey. And so really the CES is an attempt to extrapolate from the QCEW to get a reading right now of something that we won't know for sure for a number of months.
Okay, you didn't get into the weeds at all. What you did was preempt my next question, which is exactly that. Thank you. Okay, so this is where there has been the controversy recently.
Yeah.
It does, and has suddenly created this understanding of the BLS and what it does, and the questions around it. So so you have these monthly data that are gathered manually, right? These are surveys. I mean, perhaps you can talk about the challenge of actually getting this monthly data. But recently we had this huge correction, 911,000 between fewer payroll, correct me if I'm wrong, but fewer payroll people added to the payroll between March 24, March 25. So understanding that there are challenges, how should the public understand the swings, the inaccuracies of the monthly data, and how should, I know as soon as you're talking about at the Brookings Institute, but how should businesses interpret that data when there is this understanding that it could be just frankly wildly inaccurate?
So I would challenge the wildly inaccurate.
Okay, yes, I know. I was trying not to say something quite
That's right.
harsh
I
as
mean,
that, but basically, yeah,
yeah, but why is that? Well,
yeah.
remember that we're trying to measure the total number of jobs in the whole economy.
Hmm.
So even this change is 0.6% of employment in the country, right? What it is it, however, is a larger share of the growth that we thought occurred over the past year. So if you put a
Ah,
smaller denominator under it, it looks larger, right?
yeah.
But okay, so, but you can't. It's hard. You're not really counting change. You're counting totals and comparing two totals to each other, right?
Okay.
So, so let me answer the question on a high level, and then we can get down to the more detailed level.
Okay.
On the high level, the way to understand this is that this is the best, each number that the BLS puts out is the best number that is available at the time. It is the gold standard.
Mm.
That doesn't mean that it's not going to get better over time. And that doesn't mean that the BLS couldn't down the road redesign this whole system that would produce numbers with no revisions or smaller revisions going forward. Right? Okay. But right now, there isn't anything better.
Mm.
And there's a lot of information in it. Okay. So how do we proof that there's a lot of information? Well, there are studies that say how good are these measures compared, compared to other data that are available, and these are the best, right?
And then there's a margin of error anyway, isn't there? I mean, these are
Oh,
statistically significant data, even if there are variances at the end of the year.
right. Well, the standard of error on the monthly change in
Mm.
jobs is over 100,000. So any change less than 100,000 is actually not statistically different from zero. BLS puts a big P next to each of its preliminary numbers, but people ignore the P because
What's the P? What's the P?
preliminary.
Oh, preliminary.
Preliminary,
Right, preliminary. Okay.
right.
Mm.
And it is the employment situation is the most important economic release in the world.
Yeah. It,
Okay. it's the most important one in the US, and it's really the most important one in the world. Now, any particular month, people might be worried about this, that, or the other thing. So sometimes people are hinging on inflation, but an awful lot of the time, no one's paying attention to inflation.
Erica, but hang on a sec. That's a very big statement.
Yes.
Why is it so important globally? Especially, I mean, to the US, but also globally. What is the significance of this data, really?
So on a month-to-month basis, people are using it to judge the state of the business cycle. And so it's very important for forecasting. And it's very important for monetary policy and for fiscal policy as well, right? Because government debt can depend very strongly on the business cycle, right? And so it's revenues and also entitlement expenditures, all that really key off the business cycle. And as we talked about monetary policy, that is interest rates, right? But also demand. When we're talking about real estate market, that's one of the most cyclical markets in the country is real estate. And so people in real estate very much want to know where are we in the business cycle, and and what kind of monetary policy is in play for what's going to happen in interest rates.
Mm.
So and why does that matter? Well, because we have some it's overall growth rate. People care about the big trend, but they also care very much about these wide swings in economic activity known as the business cycle, recessions and expansions, because if you're going to time the market in any way, then a lot of it is about the business cycle.
Okay, so let me ask you this then. So 12 months ago, I want to get back to this. It's fascinating, this number that you talked about being 0.6 of 1%. It's 900,000 shift or correction in the data based on much more accurate data rather than on preliminary data, the monthly preliminary data. So if somebody made a decision 12 months ago based on the original data, and now discovers this, if they had known in hindsight or in foresight, I guess, that the number was actually 911,000 different, how would that have changed in any way decisions that they might have made?
So I think most decisions aren't that finely tuned, right? So I don't think many people's decisions would have changed that much. But they might have factored in the likelihood that we were a little bit closer to recession than we thought. So we were all thinking, has the Fed achieved a soft landing? Well, it looks like inflation has come down. The labor market is still strong. This looks really good, right? We're not anywhere close to slipping into recession, and yet the Fed has brought down inflation. Things look good, right?
But what about the Fed? How might the Fed have reacted differently if let's just say the monthly data had been spot on exactly
with this, right? Yeah. If we, so then they might not have raised interest rates quite as much. I've forgotten when they stopped raising them, but they might not have raised them quite as much, and they might have started cutting them a little faster.
Interesting. Okay. So there is a methodology. The challenge that the BLS has, again, I've been reading a bit about it, is both in funding and manpower, and also the issue of survey responses.
Yeah.
Can you just briefly talk about that before we move on to some perhaps slightly hotter topics?
Yeah. So start with response rates. So remember the administrative data, no issue with response rates, administrative data, but the survey is where the timely information comes from. And this is, remember, a survey of employers. So it looks much more like a business form than a household survey, right? This is fill out this information. Most of it's collected electronically from the companies. They send it in. They have about 8 different modes depending on what they prefer. So from very, very automatic to all the way at the bottom, they can still fax it in if that's really what they want to do.
Right.
So
The
that's the
mind boggles.
small, yeah, the small mom and pops. They have to be in the sample too, and you can't require them to go fully automatic if there's nothing automatic about their operations.
And are they paid like the states as well?
Oh, no. No survey respondents are paid, and it's all voluntary.
Okay.
Okay. So there are 2 response issues here. One is that when you are approached by the BLS to say, can we convince you to be part of the payroll survey? You don't sign up for just 1 month, you sign up for a period of time. And so if you're a small employer, then it's going to be pretty short. I've forgotten what the minimum is. It's like maybe 3 years, something like that. Might be shorter, but I should ask that question. I've forgotten. The very largest employers are in what's called the certainty sample. They're so big, they would always be chosen. And so they're just asked always to participate. Okay. And then there's this continuum between them. So they're asked when they say they're going to participate, then they have a few months to try it out. BLS wants to make sure they're actually capable of doing it. And when they're fully initiated, then that's what BLS counts as its response rate. Digression. Response rates in the survey world have been going down for 30, 40 years everywhere and for every kind of survey. This is not a public sector issue. It's public sector response rates are still higher than anything you'd find in the private sector, but they are going down too. So everybody, all countries, all kinds of surveys, response rates are going down. It's partly survey fatigue. There are so many surveys out there. When surveys started, only the government was doing them, and it was very exciting and interesting. And the government wants to know how
kind of
we're
flattering,
doing.
really.
That's
right.
right.
You got to think from the
I've
government.
been chosen.
Right.
You haven't been chosen well.
That's right.
And times have changed. It's harder to there are more screening mechanisms to keep out calls from people you don't know, and there are more concerns about privacy. There's less trust in government. There's less civic responsibility. There's a whole range of things that all feed into this, and no research that has been done has found a magic bullet to increase survey response rates. Not paying people, not making it mandatory even, because no one's ever been prosecuted for not doing it. I mean, you get a boost, but it doesn't solve the problem. So you have in the past 10 years, the initiation rate for the payroll survey has fallen by 50%. It's gone from 70% down to 35%.
Oh my goodness, that's response rate to these surveys.
That's the initiation rate. That's agreeing to be in survey at all. Now, what's also happened, okay, so that feeds into the annual rebenchmarking process, because if there is the lower the response rate, the more likely it is that the people who respond are different from the ones who don't respond.
Well, it's also this margin of error as well, isn't there? Increases.
There is the margin of error. The impact on that is much more important for the industry sectors than it is for the overall number. So there is an increase in the margin of error, but you don't see it so much at the national level. Where you see it is in the ability to look at real estate jobs versus not real estate, some other industry, or if you're thinking of investing, say in um, in retail trade or something like that, what's happening to retail trade in particular. So that granularity definitely loses out. Geographic granularity, that loses out. On the national level, there's so much sample in order to provide any granularity that's less of an issue. But okay, so well, let's stick with benchmarking for time being. Okay, so why does that matter? So there were two sources of this 900,000 discrepancy. So think about it this way: BLS starts off with the last benchmarking QCEW. It chooses its sample and it says, we have a sample now that whatever happens to them, we think happened to everybody for the year. And then we say, okay, is that true? Right? And they discovered no, that their estimate based on what the sample did was over predicted the number of jobs that had been created by 900,000. Okay. So what are the sources? Well, there are two sources that they've done so far. There's a third one they haven't gotten to yet, but the two sources that they have identified, and they look for every year when they do this, they look for these two things, is one, that the people who responded were different from the people who didn't respond. Okay, so the establishments who didn't respond were much more likely to have created fewer jobs than the ones who were in there, and that agreed to participate and were able to initiate. And so you could tell a story, this would be consistent, that says that companies that are in disarray, employers that are in disarray, are less likely to say, yes, we're going to participate, right? Now, ordinarily, I mean, you can also be in disarray because you're growing very fast, right?
Right, the flip side, exactly right.
But this time, there was a decided bias, right, in that, okay? The other part of it was that, remember, there was responding to the survey is not the same as sending in your QCEW report, right? And so there was misreporting on the part of the employers. They said they created more jobs than were reported to the state.
Eventually, I see.
Eventually.
Is that also something, Eric, sorry to interrupt, but is that also something that could have happened during the year? That they hired people and then
oh yeah, that's what we're talking
right?
about.
Yeah.
That they hired people over the course of the year. So that they told the that they told the BLS they hired, but were not eligible for unemployment insurance. So maybe they were contractors and they were working off of a different part of their accounting system, and they accidentally included the contractors when they shouldn't, because we're counting payroll jobs here, not right. Or maybe they were hired off the books or something like that. Or maybe they were just making a stupid adding error. Who knows? But anyway, so there's a systematic over reporting for the survey that then when you got to the UI, it turns out wasn't real. Right?
Interesting. Yeah, also, it's slightly cynical, and I don't want to go down this rabbit hole particularly, but is this also because what you report to the state in some way ends up being a taxable event, whereas what you're actually sending to the BLS is not? And so you might be, more forthright with the BLS and a little more circumspect with the state data. I mean, it's
Yeah,
a wild guess. I don't know.
Yeah, I mean, I don't hear that so much, but you could have, for example, If you have, as I say, people off the books, right? You're not gonna,
That's what I'm kind of
no,
speaking, right,
right. So
speaking.
off
Yeah.
the books, definitely you have, you're keeping, that record there, but on 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 your books, say for tax purposes or whatever, you're calling these people contractors or services, but yet you're keeping track of them somehow. In some way, you're keeping track of them as if they are your employees, right?
Erica, so we're really getting deep into the weeds, which is good. It's really
Uh-huh.
interesting. But
Mhm.
high level, the big
Yeah.
picture is that the way that the BLS gathers data and the way that it presents the data is, in fact, from a survey perspective, globally best in class, isn't it?
Yes. Oh, yeah. Most other countries do have followed what the BLS has invented over time. So
Mm,
the unemployment rate, which doesn't come from this survey, right? Because employers don't know from unemployment. They don't, all they know is how many people they have working for them. So to find out unemployment, you have to ask households, who do you have who's looking for work? And
mm,
questions about them, right?
mm,
The unemployment rate, that whole that statistic and that whole process was invented by the BLS. And that now, so every
mm,
country that has an unemployment rate, they are following what the BLS did. And similarly, they have counts like the BLS's um, payroll survey. They may collect it in a different way because they're set up a little differently. And some of those ways that they do it may offer opportunities for the BLS when it finally has the chance to modernize the payroll survey. Right. And so I'll just Australia, right? Australia has an arrangement between its statistical agency and its the Treasury Department, its tax agency,
mm,
where every time you pay payroll, an employer pays a payroll and it sends information from that to the tax agency.
mm,
The Treasury strips off takes out of this the information that the statistical agency needs for its payroll number,
mm.
right? And so
And
some,
that's much more regular, isn't it? Very accurate, presumably.
that's right, and that's more real time,
Hmm.
and it's complete on a very regular basis. So
Mm,
we could do something like that, wouldn't necessarily have to go through Treasury, could go through our payroll service providers or something like that. But
mm,
so there are opportunities like that. There's another opportunity associated with this, which would be to really promote the adoption of data and technology standards for this information that all companies have to keep anyway. And if they were all keeping this in a standardized way, then their burden would go down and their ability to benchmark would go way up.
mhm.
And uh, this could be collected much more easily. And then you would have a kind of a public-private governance system for deciding what should be in those standards. But this would be the kind of interoperability that we should be really moving towards in the information age.
You know, it's difficult not to think that this discussion has not, or what's happened recently, I'm going to get into that specifically in a minute, hasn't put the BLS kind of on the back foot now, having to defend the processes that are, globally world class, but at the
Mhm.
same time forced some deep thinking within the department. Is it a department?
Agency, yeah.
Between the within the
Yeah.
agency
Yeah.
about, okay, look, maybe again, I'm just asking,
Mhm.
but that maybe it is time to start reassessing the methodology for gathering this and accelerate that process? Or is it something that has just, because we've always done it this way, we're going to continue doing it this way? It's how it's always been done, right? You've lived and worked in bureaucracies a lot, so you know what I'm talking about.
Yeah, there's a third way that, and this is how I would describe it,
Mm.
which is statistical agencies know that it's mission critical for them to always be modernizing, that it's never one and done. No matter what you're doing now, you're always have to be working on modernizing it because the economy changes, technology changes, uh, the questions that you want to ask change, right? So the modernization is critical. And the BLS has been starved of the ability to modernize. So they have been wanting to do this sort of thing, and they have. So the current population survey, there is a plan that they've worked out with the Census Bureau, which is their partner on that, to completely change how they gather that information, and it's never been funded. So they're doing it on a very slow path. And with the payroll survey, they have modernized a lot in how they get the information from the employers, offering these new, more electronic response modes, and they are working on on a number of innovations and thoughts about, well, maybe they can collect the information much more on much more of a flow basis, and then we'd have, in some sense, more revisions, but each one would be smaller, right?
So let's move into this
Yeah.
for those lucky listeners that have
Stuck with
are
us.
still here, which I would certainly be. I'd be re-listening to this multiple times if it was a podcast I was listening to. Okay, so let's get into these. You just stop me if these are questions you don't want to answer. I'm totally fine with that. But what are the implications when politicians or political leaders question the integrity and the way that the current president has of these statistics? Erica and I'll get her. I know
McIntarfer, yeah.
McIntarfer, thank you. I only ever
Yeah.
read it, so I don't say it.
Yeah.
McIntarfer has described it recently as being dangerous. Would you agree with that? And if so, why?
Um, because remember I talked about innovation being mission critical. Another thing that's really mission critical for a statistical agency is trust. And this is not a, you know, uh, a nice to have thing or whatever. It's mission critical because the only reason to produce these data is so that people will use it to guide their decisions. And people are not going to use it to guide their decisions if they don't trust that it's objective and accurate, right? And these attacks have directly called into question and have attacked the accuracy and the objectivity of the data. So for the people who believe these attacks, they're much less likely to use the information. They're going to rely on, well, who knows what, or nothing at all. That's not good for the country. And
Okay, so why though? So how will their decision making change?
Mhm.
Again, from business perspectives, I
Sure.
wrote about this. It's okay. So why do we actually need this? How does it affect me locally? You know, when I'm looking to buy an apartment building, what
Mhm.
happened to to employment nationally? Why does it really matter at the end of the day?
Well, it matters because when you invest in something, you have some expectation of the return you're going to get from it. And that's based on your forecast, right? How many people are going to want to live there or work or rent space in it for their businesses or whatever that structure is going to be used for. Is the demand for it actually going to be out there, right? And what's going to happen to the value of the land in the area, things like that, and what's going to happen to the cost of maintaining it, and to the carrying costs, right? So the interest that you could get for other uses of the money, right? So this is this is a forecasting decision based on your understanding of the situation right now. So, for example, people will look, we talked about the business cycle, but also within any particular month, you're comparing one industry to another, what the growth in this industry versus the growth in that industry. You're looking at the impact of demographics on various kinds of activity. And so much of that, it really hinges on federal data. And one of the reasons people have been willing to invest in the US is because they feel that there's a lot of transparency in the US about our economic conditions. It's not like China, where nobody knows how they create their statistics. Right? Right.
Yet, okay, let me take the counterpoint there. Yet,
Yes.
China is a profoundly strong competitor to
Mhm.
the US. So their data is not transparent. Their form of governance and the way that the economy runs is not transparent. Ours is, and yet they are still the strongest, most powerful competitor to us. So isn't there a case to be made that actually we don't need transparency? We really don't need this data. We can dictate it from the top and say, this is everything's wonderful. Trust me, right?
Right. Well, in that case, I mean, the way that people get some confidence that this is going to work out for them is by paying obeisance to the leaders in China, right? Say, I make you happy, you will make me happy, you will protect me. And that's not the philosophy of our country, right? Our philosophy of our country is that we want decision making to be relegated, assigned down to the lowest possible level, because we think that then we're going to get the best outcomes for everybody. And we're not going to invest it in some small group of decision makers for the entire country, who may be right, but they may be wrong, and they may not favor you, depending on how much of the returns you're willing to share with them. Right. So we have an entirely different philosophy for our economy, and it has served us well for a very long time. The other problem with people not trusting the data is that then you get the downward spiral, because why would you participate in a survey for data that you don't trust? Right? It's a burden to participate. And if you think it's lousy data because it's not objective or just fundamentally inaccurate, then why would you participate in the surveys? And then you get the downward spiral. So we, on a day-to-day basis, there was a paper. There is a paper written by a recent Cornell PhD candidate who showed that companies that relied on older census data, because remember, the census comes out only once every 10 years,
Right.
made worse investment decisions. They didn't do well compared to the ones who used data that was fresher, so got it sooner after the census data was published. And even that effect attenuated a bit once the American Community Survey came in and started to essentially do a better job between decennial censuses of telling you what conditions were like. So it drives decisions, and poor data makes for lousy decisions.
Erica, so the next question I
Yeah.
have is, with the erosion of trust,
Yeah.
and let's just take it to the nth degree, right? So a
Mhm.
complete breakdown in trust,
Right.
or a completely politicized BLS.
Yeah.
Just kind of move forwards in that direction.
Mhm.
Uh, what are the implications then? And yeah, I mean, if like other departments or agencies have been shut down, what's the alternative? I mean, where does that lead us, actually?
Yeah. So we're better off than we were before the burgeoning of all of this private data, right? So you have Revelio, ADP, Billion Prices, and Indeed, and quite a few other private sector sources of information that that complement the federal data. They don't substitute for it, because many of them actually rely on the federal data to validate and to weight their results so that they know that they're doing something nationally representative. But if the federal data disappeared, they would be better than nothing, right? So we wouldn't be all the way back to the 1930s or 1920s. We but we would be flying much closer to blind than we are now. So the windshield of our car or airplane would be a lot cloudier. And that means that every investment would be riskier, which means interest rates would be higher. There would be less investment. It would all be more costly. Innovation and growth in our economy would be slower.
Right. So, do you mind if I wrap up with just a couple of quick questions that,
Sure.
So I'm just going to say, you say 10 minutes, because I
Right.
really want to be respectful of your time, even though these questions warrant 10 hours of conversation. Yes. So
and I've been long-winded, I know.
Thank you. So forgive me if I move into an area that really does warrant significantly more attention. It certainly does. It is something that weighs on my mind profoundly. But you also spent a lot of, and by the way, also just to make it clear, if you don't want to answer and you prefer not to, just let me know. I'm totally fine.
I'm going to predict what your question is, but go ahead.
Well, go, but you might not, because I'm actually going to change tack.
Okay.
Yeah. So you were also a vice president of the Federal Reserve Bank of New York for many years, and before that, you were an economist at Cleveland, I think. Yes. So you have a lot of deep experience of the Federal Reserve and the way that it works. And so, so why is so again, 10 hours really of conversation in just a few minutes, and I'll go for as long as you're willing to. But why is the Fed's we've talked about the BLS and the possibility it could be the companies could pivot to the private sector. It wouldn't be as effective, but it's not as bad as zero from like 100 years ago. Right. But why is the
Yeah. Well, I would throw in that you could expect that in that case, that information would not necessarily be publicly delivered, right? You'd have to pay for
it. Exactly. Right. So now you've created a whole different business environment. Exactly. The winners and the losers, basically. Yeah. Okay. So, why? So we've talked about political pressure on the BLS and the potential implications, but what about the same kind of political pressure, even more intense, on the Fed's independence? What are the implications of that? How do you view that?
Yeah. So if that's what happens, right? That we get all of the sudden monetary policy is being made in the White House, right?
And the data also, right?
And the data also. Then you probably get a sugar high in the beginning, right? You get a burst of activity. Everybody thinks things are going great. Interest rates are low, lots of investment and growth and all of that. And then when you start to get inflation that people see in their lives, but is not being reflected in the data that is being delivered to them as if it were accurate, then you get people not trusting the data, and you also get the impact of inflation on their activities, right? And so you probably get that's when you get a stagflation situation, right? Where the economy starts to slow down, but inflation picks up because government spending is going up without restraint, because you've got and yet people aren't confident about the future because this doesn't feel stable, right? And so you get economic activity slowing down. So in countries that have done this, it's been bad, right? This has ushered in a long period of prolonged recessions with inflation, turmoil in the government because the government isn't functioning properly either. And so you need some kind of big, often, regime change move to get you back on track. So it's not pretty.
So we have
That's
seen this. There are case studies: Argentina, Turkey,
the
uh,
Greece.
Greece.
Yep.
Yeah.
Yes. Yep. Yep. This has happened, and it's not pretty. So
Okay. So I think it's incredibly reassuring to talk to you, Erica, because I sit here thinking about what's going to happen and trying to plan around the radical changes that are occurring in this country. And one of the things that I imagine is that, yeah, in the beginning of next year when PAL terms out, we'll see dramatic reductions in inflation, sorry, in interest rates, an injection of adrenaline. You talked about a sugar high, but this just injection of confidence and adrenaline into the economy. Everybody thinks it's fantastic. It picks up very quickly, and a huge amount of money is made in a very short period of time. But how long will it take? And I've also been talking about or thinking about the impact on the dollar, confidence in
Mhm.
the dollar, what's it called? Exceptional. I forgot the exceptional.
Yeah.
What is it? The exceptional privilege. It's not exceptional, isn't it? It's the extraordinary privilege that we have,
Mhm.
in the world stage. But when you
Where
talk
our bonds are considered the safest thing.
in the world, right? But when you talk to economists, and everybody tends to, there seems to be a consensus around that perspective, but no one talks about how long it will take. So how long do you expect? I mean, just based on what you know, and I know it's like asking to predict or whatever, but is it, we get this sugar high, is it for 12 months? Is it for 2 years? Is it for 10 years? You
Well,
know,
it's not 10 years.
before we come off this high, will it
Yeah.
it'll outlive the elections, the
Administration.
midterms? Okay, so you're talking now 3 years. I'm okay, definitely the midterms, right? So it's incentive to boost it before that.
Hmm.
So how long does it take, do you think, before the sugar high wears off?
Um, I really don't know. I hope that if this happens, it takes a short time because the shorter the time, then the less the damage. And I hope that the wisdom that is founded in the academics who have studied this, but also in the financial markets and in the business community that have seen this in other countries and other times, will really come to bear and keep it from getting out of hand. So I think if we go in that direction, then frankly, I think it's the business and the financial community that that will be the only ones who can stop it from getting bad.
Erica Groshen, labor economist and 14th Commissioner of the US Bureau of Labor Statistics and former Vice President, Federal Reserve Bank of New York. You are an enormous pleasure to have on. Thank you so much for giving me time today. I really appreciate it.
My pleasure. And this was a fun conversation. And if people want to know how they can help keep things on the right track, they can join the Friends of BLS. It's free. So www.friendsofbls.org. And they can also add support for the statistical system to their legislative affairs agenda going forward, just to try and keep the worst case scenario from happening. So thank you, Adam. I really appreciate the chance to talk to you and to your audience.
All right, that was Erica Groshen, 14th Commissioner of the US Bureau of Labor Statistics. Erica, what an enormous pleasure talking to you. I'm very flattered, like I said, that you chose to join me on this podcast and really enjoyed the conversation with you. I would love to have continued talking. You've got incredible background, both in academia and in your work life, and it's just a real pleasure and a joy to have had the opportunity to talk to you. Thanks so much for that, and thank you too, dear listeners and dear viewers, for joining us. I have no doubt that if you're listening to me now, you have heard a lot of information that is new to you and hopefully gives you a greater depth of understanding about what's going on, how the economy works, how the federal government works, what's important, and how we can how to understand what's going on a little bit better as you make your decisions every day in your real estate investing activities. Okay, that's it for this episode. Again, thank you for having joined me and my guest today. I look forward to seeing you next time. But for now, this is Adam Gower signing off.